Australians are taking action to install these technologies, especially with the Cheaper Home Batteries program that the federal government has offered that has really reduced the battery prices, helping Australians rapidly install those solar and batteries systems.
Hello and welcome to The Greener Way. I'm your host, Michelle Baltazar, Executive Director of Media at Financial Standard Sustainability. Today's episode focuses on green lending and how the energy crisis could accelerate decarbonization, not just in boardrooms, but across millions of households around Australia. At the center of this household energy transition is the Clean Energy Finance Corporation, or the CEFC, also known as the Australian government's Green Bank, but more on that later. Joining us to share the latest on sustainable finance is Grace Tam, Head of Consumer Finance at the CEFC. Grace, thank you for joining us.
Hi, Michelle. It's good to be with you.
Now, can we start by explaining, if you can explain to us how the CEFC operates in practice and how you lead the $1 billion Household Energy Upgrades Fund?
So the CEFC is backed by the Australian government. We invest in clean energy technologies. Under the $1 billion Household Energy Upgrades Fund, our mission is to help Australians transition to cleaner energy and more energy efficient homes. As we are a government entity, what we want to do is to work with other lenders and finance companies in Australia. We want to leverage their broad customer base and the broad distribution network so that we can help more and more Australians access cheaper finance that will help them install these clean energy technologies. As an example, we launched our first co-financing facility back in June 2024. And today, in April 2026, we've got 7 programs being made available to Australians. We've invested about half of our $1 billion, and we've crowded in additional capital from these lenders of up to $860 million. So we've got a big pool of money to help Australians make that transition. Now, I need to clarify what a green loan is. A green loan is basically a loan that is offered to everyday Australians to help them overcome that upfront cost, which could be quite expensive to install these clean energy technologies, by lending them, helping them understand what is a green technology like solar, like battery and energy efficient hot water system, heat pump hot water. We explain to them how these will benefit them from an energy perspective, and we also help them with a lower interest rate so that they can benefit from the cheaper energy and cheaper home loan more.
That sounds exciting. And certainly, I was just checking your website earlier, and it's been a busy 12 to 16 months. Can you tell us more about the highlights or what's also in your calendar this year?
Yeah, of course. I guess the highlight is it's been very pleasing to see so many financiers and energy service companies jump on board onto our program. My key vision is to make sure we use finance as a leading indicator to help develop the ecosystem. So in the home energy ecosystem, it's actually quite complex for someone to understand what technologies they need to install, who needs to install them, and how much it will cost them, and in what order to install those. So what I really wanted to do was, by having these cheaper finance offerings out there for ancillary technology companies and energy advice services to develop organically in Australia. And pleasingly, we're seeing that. We're seeing the usual vendor-led finance system, finance offering, where basically a vendor will go into someone's home and help them understand how much solar they might need and what type of battery they might pair. We're now seeing online digital platforms that help customers self-service and input their current appliances and energy bills that will come up with a recommendation of what they need, how much potentially it will cost them, how much they will save, and how to access government rebates and finances. And with that, paired with the cheaper finance, we're now seeing a much better consumer journey to help Australian households navigate this typically quite complex home energy ecosystem. So that's something that we're seeing develop, which we're very happy to see. And as a result, we're seeing more and more Australians becoming more educated and confident about taking energy into their own hands and making those installations and purchases.
I can totally relate to not understanding where do you start. I mean, we all have solar panels now, but now we're talking about batteries, EV, and a host of other, like you've mentioned, other energy-related products. Now, in terms of the take-up, do you have any numbers at all on how it's been taken up? Are there any states in particular that are probably embracing it or adopting it more than others?
Yeah, it's been great actually to see national take up. So there aren't any states that are missing out. And so far, we've seen over 5,000 loans being taken up in our program, and people typically install more than one technology at a time. I'd like to share with you some of the key lessons that we've learnt. Initially, when we launched Green Loans program, we were marketing it from a sustainability point of view, encouraging people to install clean energy technologies because it's good for the environment. But what we found is that Australians are very financially savvy and they are very good at taking advantages of incentives such as government rebates, grants, and also our low interest rates. As a result, pairing that with how it can help them take control over their energy bills, Australians are taking action to install these technologies, especially with the Cheaper Home Batteries program that the federal government has offered that has really reduced the battery prices, helping Australians rapidly install those solar and batteries systems. And what we typically see is that Australians install system sizes that completely wipes out the energy bills. So once the loan's been repaid, they get free energy. That's like a really great deal for them. And as the battery prices come down, the time period required to pay back that loan has compressed. So previously we saw people taking out about a 9 to 10-year loan that has now come into 7, 8 years. So we can see how it's going to rapidly benefit Australians from an energy and finance point of view. What we're also seeing is that Australians are signing up to something called virtual power plants, where they can sell any excess energy back into the energy grid and generate revenue to help them pay back their system even faster. And what we want to do is help Australians better understand these emerging virtual power plant plans so that they can actually help support the electricity grid when there's needs additional energy that they can sell in while actually wiping out the energy bills. So we're seeing Australians become more and more savvy about their energy costs, energy needs, and technology. So we're in a great point in time in terms of both supply and demand dynamics.
I think that is the buzz phrase at the moment, energy bills. How do we reduce them? Certainly not just households, but companies as well, whether it's you're in the construction sector or you're in the agricultural sector, because everyone needs cheap or reasonably priced energy. Now, I want to turn to the investor lens for a moment. It just feels like every time we do a podcast, I do mention the Middle East conflict, but it is a present issue and people talk about the global energy markets. You've talked about duration contracting from 10 years to 7 to 8, but are there any changes that investors should be aware of when it comes to green loan pricing or risk? Has that changed at all?
Not at all. Actually, ever since the CEFC has lent green loans to consumers, what we're finding is that a lot of the households are very finance savvy. And as a result, we're seeing people with really good credit scores taking up these loans. So we are seeing very low default as a result. And a lot of these households are homeowners. So they actually want to take care of their home. They stay in the home. They see the benefits from an energy and a cost perspective. It reduces their bills. So they will keep servicing those loans. So in fact, we are continuing to see really great credit performance in our green consumer loans.
Wow. It feels like all good news. What are the challenges though? What's what would be the barriers right now for those who are coming into considering them, but again, we're in the midst of a cost of living crisis?
Yeah. So, what we've identified as some of the gaps that we really want to address is we want more households to take hold of, to take advantage of these clean energy technologies. And we still think that some consumers are hesitant because of, the complexity with installation dealing with trades. So, what we're looking to do is to sponsor a consumer education campaign to help Australians understand how to talk to installers and also to help Australians understand how to get off gas because gas prices could be increasing, and by getting off gas, they can remove that volatility. And lastly, with all these new virtual power plans, we want to help Australians understand which plan to pick that's best for them from a value perspective. So we're rolling out these consumer education campaigns so that we can help those consumers who are thinking about it but finding it too complex to actually go and educate themselves and have the confidence to take up more of these loans.
And now, zooming out a little, when you look across sustainable investing and green loans more broadly, are there any new trends in terms of how banks or non-bank lenders interact with people who are interested in green loans?
Yes, absolutely. When we first launched this program, a lot of the financiers wanted to do everything themselves. So they wanted to do the lending, they wanted to upskill their workforce on what are these green technologies so that their workforce can interact with customers. What's transpired is that actually the customers would have done so much research themselves that that conversation between the customer and the bankers becomes quite complex and requires quite a lot of work and time. So what the lenders have since done is engage with these home energy platforms, specialist platforms that I spoke about earlier, who provide this concierge service to the customer, who are the specialists in understanding the technologies, who offer that specialist advice in terms of, what type of trades you need and help them get quotes. So now we're seeing, instead of the financiers doing everything themselves, they're now partnering with different home energy platform service providers to help the consumers get on board.
And now, is there anything else you think investors or green loan applicants should be paying more attention to right now or be more cautious about? It just feels like there is so much uncertainty.
No, I only see more and more Australians getting on the journey of green loans and seeing the benefits from a financial perspective, benefits of taking control of the energy and the energy bills. I guess from a finance investor point of view, I've been talking to investors for a long time about investing in green loans, but a lot of the feedback from investors previously was, I'm not seeing uptake, or it will take some time to build up that asset pool. It takes some time for people to get on board to sign up the loans, and then it takes a while for us to see any investable size of finance parcel. And what I've always said to investors was, if you don't get on board now, by the time there is an investable parcel, it could be too late for you, right? Other people would have jumped on, because I could always see that when the point in time that pivots, when suddenly Australians get on board, that pool can actually build up quite quickly, which we are seeing right now. So it's the same message to investors. Get on board now, start learning and deciding on what your criteria for green is, start engaging with lenders and start working with lenders to provide wholesale funding to on-lend to customers, because that pool will build up quickly. And then given the great credit performance of this pool, they'll be on high demand. So the sooner you get on board, the sooner you can actually benefit from having a green pool and also supporting these really great credit Australians.
I do feel that, just using EVs as an example, suddenly there's been a massive take-up of EVs. But anyone who's been providing EV loans should have looked at it a year ago, not
exactly
this month. Grace, it's been great to get your perspective, not just on what the CEFC is doing, which is amazing, but also how sustainable finance is evolving despite the global uncertainty. Once again, thank you so much for joining us.
Thank you, Michelle.
And thanks again to everyone who's listening. And if you enjoyed this episode, make sure you subscribe and share. Until next time, I'm Michelle Baltazar. Thanks for tuning in to The Greener Way.
The Greener Way podcast is a product of FS Sustainability. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, legal, or tax advice. Before making any financial decisions, you should read the product disclosure statement, and if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.